What's up, everybody? Welcome to the Scratch Agency podcast, hosted by Scratch Agents for Scratch Agents. This episode is brought to you by Virtual Intelligence, your premier partner for client-facing and back-office virtual employees. My name is Turnbull, founder of T5 Insurance Services in Clinton, New York, and I am joined by my co-host today, the one and only, you already know, hold your applause, Mr. Shawn Fitzgerald, founder from Sound Harbor Insurance in Long Island, New York. Mr. Fitzgerald, we got through it. I was nervous about the intro. It's been a month since we recorded. I feel like it's been 3 years since we've sat down and done this.
Yeah, it's been a while. We usually batch them, but you had a baby. I had a bunch of stuff going on in my life, and that's just how it works out sometimes. It's all
I know,
good.
my
We're
wife
back
had
at
to
it.
go into labor, and now we're all behind.
How dare she? How dare
I know.
she?
I'll talk to her later about it. Super excited for this next guest. We actually had the opportunity to break some bread a month ago, 2 months ago, whenever it was recently, and sat down with James, had some great conversations. I'm going to butcher your last name, James, so I'm not even going to go there, but I'm just going to invite you right on. And I really appreciated you coming up to Utica here. And we had a fantastic conversation over dinner and had some drinks, which was great. I joked before we started recording, I wish we were doing that instead of recording the episode, but we should have some drinks and record the episode. I think that's what we need to do, Shawn, is bring that. But it was a great conversation. I'm looking forward to bringing that to the listeners. So James, welcome to the show. Do you want to start by just telling everybody a little bit about yourself, how you got started, and then we'll dive into the topics we want to talk about?
Sure. Yes. Stephen, congrats on the baby.
Thank you, sir.
I know your wife was ready to go when we met up a couple months ago. So that's
right.
Awesome. Hope that's all going well. Yeah. Thanks for having me, Stephen and Shawn. I guess to give a little bit of background, James Monreale, founder of SoundRisk LLC. We are an MGA specializing in a couple things that I'm sure we're about to get into. But as far as background, grew up downstate, if you will, in Staten Island, New York. Went to college out in Pennsylvania and Gettysburg College. And then after that, got my first job in the insurance industry as an underwriter at Travelers, went through their training program, and met a lot of good people, was really trained on how to analyze risk. It was just good for my career trajectory. Although I knew that I wanted to try something different. So about 3.5 years into being an underwriter, I made the move to the wholesale broking side at Worldwide Facilities, which is now Amwins, and was doing, a lot of what I was underwriting at Travelers, which was inland marine. So builder's risk was kind of the biggest niche that I was in, as well as just, tough to place property accounts. Did that for about 3 years, and then had the itch to try something on my own. Started SoundRisk in 2018, and we've been going ever since.
I love it.
That's awesome. James, can you talk to me, because this just popped in my head as you were going through that, that journey that you're on. Being an underwriter at Travelers and then learning about like builder's risk, moving to the other company. I'm just curious, what was like the training and onboarding like when you started at Travelers as an underwriter? Like, was it like a really solid like training onboarding plan? I'm just curious what that all looked like.
Yeah, good question. It was it was pretty regimented. They have it's almost like a school where they have like incoming classes. I think they do it a few times throughout the year. And they kind of fly everybody, like everybody works in different offices around the country, obviously. And then for like short stints, like 2 or 3 weeks, they'll fly everybody together and kind of train them on just like insurance 101, commercial insurance 101. And then after you get through like the general training, you will then be like mentored in your exact niche. For me, it was inland marine. For somebody else, it was middle market, select, what have you.
I like that.
Yeah, it was a pretty structured program, and it takes a while to truly be like,
For sure.
I mean, I don't think you get kind of let loose until like a year in. So
Yeah.
It's like a true schooling program.
That's really cool. Yeah, so they give you like the basics rundown, and then once you get through the basics, they make it niche focused. That makes total sense.
Yep.
And then, I mean, at the end of the day, there's no experience like the real world experience,
Yeah.
But did you want to add to that, Stephen?
No, I want to just I want to pivot a little different, because with the MGA side, I don't do much of that, as you know from our previous conversation. Shawn does, so I know Shawn wants to ask you some specific questions on that. But just from the wholesaling side of your experience of where you just talked about in your career, like, talk to us about what you think agents, scratch agents, agents in general don't realize about that side of the business, or just some tips, tricks, or whatever general feedback from an agent standpoint that would be good to talk about before we get into the specific niches that you guys handle.
Good question. Probably not going to come out with anything riveting, but I will say that one thing that I think is important when you're working with a wholesaler is to understand what that wholesaler specializes in. And then if things are working with that wholesaler, try to be loyal to that person and really develop a relationship. So for example, like we were placing tough property risks. So, if property was falling outside of the admitted market for whatever reason, like that's what we specialized in. There are specialists in auto, commercial auto, there are specialists in liability, there are specialists in professional lines. So kind of like picking your teams that specialize in different things and staying loyal to them if it's working, obviously, because that's how you really develop like a relationship, leverage. That's when the wholesaler is going to answer your phone at 7:00 at night. I would say that that's probably my biggest piece of advice. And just a decent submission always helps for sure. Putting together a decent submission and not being afraid to call up the wholesaler and say, "Hey, I've never placed this type of risk before. What questions should I ask?" That way, like, because we understand, or at least a good wholesaler should understand, like you can't be having a ton of back and forth with the client. Otherwise, they're going to be like, this is not easy to work with you guys. So kind of phoning a wholesaler and saying, hey, this is a little bit out of my league, or I've never placed this type of risk. What kind of questions should I ask up front? That way, you're not doing the whole back and forth game before you get a full submission to market.
Yeah,
that's a great point.
there's so much to that, and I think when I first opened the agency, that was like one of the things I had on my mind was I want to pick a hand select few direct carriers and work with 2-3 wholesalers max. Like I don't want to have 20 different wholesalers, the because like you said, you want to have the stronger relationship is everything, and I'll just put myself on the hot seat. Like I recently made a mistake where I have a great relationship with one of the wholesalers, but um, I got contracted with another company and they said, hey, if you write with this wholesaler, we'll give you an additional, 1.5 and potential bonus at the end of the year. And I was like, ooh, that sounds awesome. But and I won't put any wholesalers on the hot seat, but the problem is it's not as efficient as the process isn't as efficient. I don't get responded to in the same time. And honestly, they don't have the same carriers that the original wholesaler has that I was using. So at the end of the day, for 1.5 and maybe a few extra bucks in my pocket at the end of the year and a bonus is just doesn't make sense to do it, in my opinion.
That's a great, yeah.
So you really got to take a hard look at it too. If another carrier offers you, hey, we'll give you an extra point, 2 points. Listen, on a gigantic book, I get it. It could make sense, but you better make sure they have the same or better carriers, and you better make sure their process works like the current wholesaler you're using.
Very good
So
point.
I couldn't agree with you more. That's everything. And I feel like the issue you do run into is that you do wind up signing up with wholesalers because some of them do have niches. So you might have a wholesaler that specializes in property. Then you might have one that specializes in contractors. Then you might have one that specializes in transportation. So sometimes depending on how many niches you have, you could wind up having more wholesalers than you'd like. You know what I mean?
Yep.
But I totally get your point. How was it starting? Before I just keep on ranting, how was it creating an MGA? Like, how did that come about? Like, you went from underwriter to Amwins to I'm starting my own MGA.
Yep. Yeah. Worldwide facilities. I don't want to falsely advertise Amwins.
Oh, sorry about that.
No worries at all. I did say that, but yeah. So I was fortunate enough to develop pretty. So I had my niche as an inland marine underwriter, and one of which was builder's risk. And then when I transitioned to the worldwide facilities, a lot of what I was doing were tough to place builder's risks. So I developed various relationships with some carriers, particularly in London, and they were just placing risks that were really tough to write in the domestic market, in the U.S. market. And when I first got started off, it was like, hey, I have these builder's risk accounts. Blast into everybody, see who can write this stuff. And then you kind of just see, oh, it's kind of the same cast of carriers writing a lot of these. Maybe there's something here.
Yeah.
So that relationship developed while I was at Worldwide Facilities, and I guess the need in the market was also kind of being clear that there was this need in the market for certain types of builders risk projects. And it kind of happened naturally. So, in the beginning, we did not have fully delegated authority. It was sub-delegated authority from an MGA in London. They did not have access to distribution in the United States, so we partnered with them. And then eventually, it became via different carriers, it became our own delegated authority, and that's where we're at now.
Very cool. How do you guys, because I feel like, I don't know, maybe it's just where I'm located. I'm downstate New York. How do you guys compete? Because I feel like when I think of MGAs that I work with or know of, like they're regional, they're kind of specialized in their specific area. And then when I think of builders risk, I just, I think of, Chubb, Liberty Mutual, US Assure, like there's a few, national ones that I know that write commercial and residential. So I'm just curious, like is there like a difference or like a more specialization with you guys that I'm not thinking of related to builders risk? Like, hey, you write more coastal builders risk. I don't know. I'm more curious to see like what that looks like.
Yeah, very good question. What we kind of always tell on the builders risk side, most of our clients, it's predominantly a wholesale driven product line. So they kind of understand that when things are coming to them, it's not something the admitted market writes. But what I would tell a retailer is if the Liberties of the world and name your standard admitted market are interested in writing it, that's probably not something we're going to be able to help out on. They're going to be cheap. They're going to have admitted forms. But when it falls outside of that, and there is quite a bit that falls outside of it, you'd be shocked that they don't want, and that's where we can potentially help out. So
what does some of that stuff look like?
Yeah, some of that stuff. I mean, our main, I guess, line within builders risk insurance are renovations. So a lot of times standard market carriers don't want the existing building exposure. Maybe there's structural work going on, something that kind of scares them off. That's one of our specialties.
Okay.
Other versions of that would be coastal. We don't personally write coastal, but that's another version of like a builder's risk account that would fall outside of the admitted market oftentimes. High hazard flood accounts with high hazard flood exposure. It really doesn't, if you can get the flood included with the builder's risk carrier, it's often going to be cheaper than if you were to go to your admitted and just get it excluding flood and then get a standalone or TIC flood policy. Those tend to be pretty expensive. So that's another thing that will kind of fall into the space. And in certain parts of the country, we can write that. Large frame accounts, that's something that typically goes E&S, and the standard market does not want to write. And there's others that I'm sure I'm missing off the top of my head, but yeah, there's quite a, when you look at it as for like from the U.S. as a whole, there's actually a lot of this builders risk business that goes into the E&S market.
Yeah. I wish builders risk stuff worked like it does in Steven's market up there. He can just write a homeowner's policy and endorse it, and he's good to go. I got to do a builder's risk, a premise liability, make sure it's 6 months, 12 months. Jealousy's pouring out.
Come on up, Shawn. Come on up. I know you guys want to talk about the specific niches that James can help with and all that. Before we do that, I want to go back a little bit. Expand on the topic of a good submission. Because, and I'll put myself in the hot seat here, coming from the personal line side to now doing more commercial. And there's one specific carrier that we have an admitted market that's a new carrier to the agency. And I've developed a great relationship with that commercial underwriter. And it's because of that. And I remember, I think it was Cruz told me when I first started diving more commercial about like get everything prepared and have it in one packet to present it to the underwriter and how much they appreciate that, and that'll help develop the relationship. And Shawn, you know the story of the recent one that I wrote that was this huge building, split unit, commercial and loft. I mean, you can't come up with a more crazy story that wouldn't make sense for an admitted market, and they took it, and it was just based on the relationship I had with the underwriter. Like I'm talking roof was on fire a month before we bound the policy because someone lit a firework next door and went on the roof. Like crazy story, but we got it done, and I submitted it and had the reason behind it, pre-bind inspection, all this stuff. I just want to push for those who are listening that are going from personal to commercial of why that's so important. And on your side, James, what you see on the different sides of the coin with that.
Yeah. Appreciate that. So let me just give this disclaimer. I am not a professional in putting together submissions, especially in certain I'm not a liability guy by trade. So I won't have all the answers, but that said, I would say do not be afraid to call up your underwriter, your wholesale broker, and ask them, hey, what does a good submission look like? They are going to answer that best, especially if they specialize in it. On the property side, I can answer that. And really, having a complete statement of values, if you're working on the commercial end of things, is good, especially if you have multiple locations. If there's one location, an accord form is good, or two. But when you start getting into multiple locations, a good SOV is going to be like, that's the first thing that underwriters are going to look at.
Okay.
And really, having the right info in that. So what are the values? What's the building, the BPP, the BI, what ISO construction classes are each, the square footage of each, what the occupancy is of each. That type of stuff is going to speed the submission process along so much, as well as loss runs, obviously. But yeah, I think the SOV is one where oftentimes, you'll get an accord in, and it just makes the life of the wholesale broker, if you're dealing with wholesaler, or underwriters, if you're dealing directly with underwriters, so much easier to have a complete SOV. That gives you a perfect snapshot of the account.
Yeah. Usually I would, so when someone sends you a submission, James, they have to send accords, or is it quote online or?
Yeah. Traditionals, forward accord.
Okay. Yeah, I'll add to that because our agency does a lot of non-admitted stuff and a lot of wholesale work, and a lot of the submission, the submission does play a big role in it and how that looks. So obviously it depends on the size of the account. It depends on the type of account, like James said. So obviously accord forms are good to start with and make sure that they're actually completed and have the exposures on there. If you can put the prior carrier information on there, that's even better. Obviously, again, depends on the account, but most of the time you want to have a supplemental app. If it's a newer business, you want to have a resume. And I wrote a few other things down. If it's property specific, if you have photos of the property, like I know you did with the one you did, Stephen, that helps tremendously on top of the statement of values. And on top of the loss runs, obviously you want to make sure they're current valued. So you want to make sure that they've been ordered within the last couple of months. If there are any losses on the loss runs, you want to explain, give the underwriter some detail of what happened, right? What happened on that claim and what the insured has done moving forward to prevent that claim from happening again. That's another part I'd add on there. And then any risk management strategies. So do they have return to work program? Do they have, do they use the DMV lens program to monitor driver's licenses and, stuff like that. And then on auto, if it's anything auto related, it's not too complicated, but obviously driver's list, vehicle list, if any of the drivers took defensive driving, like if you can give all of that in the submission, it's a little extra work, but it will wow the underwriters and they will not forget it. I can tell you that. That's
definitely the truth. Underwriters would be foaming at the mouth to get submissions like that all the time, for sure.
Yeah, and look, I'm not perfect. I don't do it. I do it 90% of the time or more. But now when I don't give all of the information, I explain why I don't have the rest of it, or I'm just getting it out so I can at least clear it before I get the rest of it. So just paint a picture. If you can't get it all, at least give them the accords and explain, hey, I'm working on gathering this other information. I just want to see if it's something you could look at first and make sure we're clear before I go ahead and hound the insured for all this other information. So that's another way to go about it too. If you don't have everything, but you want to make sure you're clear with the carrier and make sure it's in their appetite, that's one way to do it too. That makes you still look good,
Makes a lot of sense.
That's all I got on that.
There's a lot of good stuff there.
A lot of nuggets. And just I can't belabor the point enough. Like, especially I'm trying to put myself in the shoes of a scratch agent. Do not be afraid to, like, I know you might not have a lot of business with XYZ carrier or wholesaler. We're all people. And hopefully you're dealing with a good person. And there is nobody that we would want to see succeed more than, a local retail shop. Marsha and Willis, they are amazing partners. There is something special also about working with kind of the smaller retail shops. And it is amazing to see people succeed and thrive in this business. So people want to help.
And
and want
For sure.
people to succeed.
yeah, and it goes back to everything we talk about with scratch agents in general. Like, you don't know what you don't know, and that's all right. Just don't be afraid to ask. Like to your
Yeah.
early point, James, of like, go and they say, hey, I have this opportunity. I don't really do a ton of it. I don't know what I should ask to make it easier for the client and a better experience. Like, what are the things I should ask? What's the key points here? What do I need to get you that's going to make you happy on your end? And I think that's just, it goes back to the basics of just don't being afraid to ask.
Yep.
Yeah. Yeah. One thing I wanted to add too, because I think that submission piece, that Stephen, that was a really good topic you brought up. So I'm glad you brought that up. I think another good thing is, and James, I'm sure you can relate to this, is when you're doing the submission and you give them all that information, let them know if you went to any other carriers. So if I go to James, but prior to James, I went to RT Specialty, RPS, all these other carriers. It would be nice to let James know, because if James goes to go out the market and he's blocked everywhere, I don't know if that's how your system works, James, but just for reference, it's going to just aggravate the underwriters. So let them know. It's going to waste their time, essentially, and yours, frankly. So just let them know, hey, I approached this other wholesaler already. This is where we're at with it. This is, you could share the quote with them if you want to, and give them a target premium. Hey, this is what the insured is paying now. In order for him to switch, we're going to need to be at around this price point. And the reason that's important, because the underwriter might look at that number and just say, hey, that's impossible. Let's not even continue with this, and it's going to save everybody time. So target premium, and if you approached any other carriers or wholesalers.
Could not have said it better myself. Yep.
Yeah.
And nobody wants to spin on each other's wheels. So that's perfect advice.
Yeah, I made the mistake. I made the mistake. I can't tell you how many times when I first started. I would just get so excited to try to write an account because I wanted revenue. And I would just send a submission, and then I would send the submission somewhere else because I wanted a competitive quote. And, you just learn from your mistakes, unfortunately. So learn from my mistake.
Learn from your mistakes, Shawn. I never heard of that. Never heard of it. We don't make mistakes over here. I don't know what you're talking about.
No, not at all. But James, what's next for you guys? So you got the builder's risk. I know you got the terrorism product, which is an interesting one. Maybe we should touch on that real quick, because I know you mentioned it's for lender place. So talk to us about that a little bit.
Yeah. So we sell a product that competes with TRIA. Are you familiar with TRIA?
Yeah. Yep.
Okay. So I guess to just kind of give a high level overview of why it makes sense to purchase a monoline terrorism product versus purchasing TRIA. Oftentimes, first and foremost, we do realize that most insureds elect not to purchase it. And we understand, especially if you are not, in downtown Manhattan, we understand that insureds, do not elect not to purchase it. We are also aware that lenders will sometimes require it. So in order to, I guess, close on the loan, or, if you already have the loan in place, one of the requirements might be to have terrorism coverage, especially if you are in certain areas of the United States. But shockingly, we have seen lenders require it all over. Like we would have never guessed we'd be writing accounts in North Dakota and Kansas and stuff like that. But especially, I guess, when you start dealing with more national lenders, then maybe they just have a national guideline that you need to purchase terrorism coverage. I'm not exactly sure, but anyway, that is really the driving force between a lot of the purchases of terrorism coverage, is when the lender requires it.
Is it mainly on commercial?
Yes, it's mainly on commercial. What we normally see it on are real estate and construction accounts. So again, I think there are commercial mortgages involved, and that's when the lender will kind of dictate what they need.
Gotcha.
Yeah, retailers would certainly be able to answer that question better than I, who are specialized in those niches. We kind of are a few steps removed, but from what I understand, that's what's driving the purchase, is the fact that the bank is requiring it to keep the loan in place or close on a new loan. I will say that 5 to 10% of our clients are actually just very risk management oriented, and they elect to purchase it willingly. So, that's definitely not a blanket statement that it's only being driven by lenders, but it's largely being driven by lenders. And when you start getting into some of these, specifically the E&S, like commercial accounts, you may, Shawn, I don't know if this might ring a bell if you're dealing with a decent amount of E&S, like the E&S carriers might charge like 5% for TRIA or something like that. They'll just kind of slap a percentage charge on there. And oftentimes, if that premium might be a 6-figure premium and you're paying 5%, and your insured is in, the middle of Pennsylvania, or where have you, is that really indicative? Like, is that premium, the TRIA premium, indicative of the terrorism exposure?
I
And
gotcha.
that's where we can really come in and help out, because that 5% should likely be significantly less. We can provide it for significantly less, and then very importantly, TRIA has not paid a claim to date. And when you speak to people in the terrorism market, like, this is what they'll always tell you first. The TRIA coverage, while super important, especially it came about after 9/11, and
Yeah.
all the insurance companies were scared to write terrorism business, and they started excluding it. And then the banks, like, it was going to become a catastrophe if they did not figure it out. So TRIA was enacted for a very good reason, and it allowed the insurance business and the banking community continued lending on buildings that were in quote unquote, high hazard zones.
Yeah.
So TRIA was very important and still is. That said, the coverage is there are certain, like, stipulations that need to be met in order for TRIA to actually respond to a claim.
Mhm.
And the monoline products in the market, specifically what we sell, but we are aware there are obviously others out there. They offer a much broader coverage. The definition of what a covered event is much broader than than what TRIA
Like the
defines.
triggering event. Yeah. Yeah. It's so funny you say that because I insured this bar in New York City a couple years ago, and I remember the guy asking me about the terrorism coverage. And honestly, he challenged me, and I had to go back and forth with the underwriter. And I remember my underwriter saying the same thing. He's like, "Hey, do you know not one claim has been paid out since
Oh
this
wow.
started?" And I'm like, "Really?"
Hmm.
So yeah, it was kind of news to me too. But yeah, it seems like a really quirky product. He wound up not taking it because of the triggering events. Like once we really dove into it, like, hey, what actually constitutes a terrorist act to get the coverage? It just didn't make sense for him.
Yeah, so you went through the whole song and dance. Yeah,
Yeah.
it is a little bit eye opening when you find out you need like 3 government bodies to certify a terrorism event, and who knows how long that can take. While they
Mhm.
investigate what happens. So yeah, certainly don't want to poke too many holes in TRIA, but it's interesting to educate yourself on the
For sure.
product and understand that there are other products out there as well.
For sure. Yeah. What about like, I just got to ask this because I don't know if you know the answer, but now it's reminding me of this accountant. I'm probably gonna have nightmares if I don't talk about it. I remember something happened in Manhattan where they like shut down a few blocks, right? Because of a potential something, and I remember nobody could go to his location because the roads were closed, like where he was. So I don't know. Do they offer like loss of income on terrorism coverage?
I mean,
Yeah.
you're really getting into the nitty gritty, but there is a coverage called ingress egress, which I mean, obviously you have to read exactly what the
For
product
sure.
you're purchasing is in the form. So
Yeah.
this is not a blanket statement for all products, but there is, generally speaking, there is a sublimit sometimes offered on monoline terrorism placements that is referred to as ingress egress. And that's
Hmm.
exactly what you're talking about. So if an event happens that doesn't directly impact your building, but it impacted a
Yeah.
building down the street or whatever,
Yes.
the whole area is
Right.
closed off. People are not now coming to your store, and you lost X amount in revenue because of this. There is a coverage for that, and it's referred to as egress.
Very interesting.
That's
You
so
gotta
you had a
read the
scenario.
policies, boys and girls. Read the policies.
Exactly.
Yeah. It was after I was the agent, okay?
But
Well,
good
I mean
question.
that's yeah, no, it's the add-on to the liability, the liability or package policy, it just my experience, 99.99% of them just don't do it because once you really read into it, it just doesn't make sense. But knowing there's a monoline product out there that the triggering events could be a little bit more broad and you have that coverage, like in New York City for like a lot of stuff I do, it might make more sense to talk about. So I'm glad we spoke about it.
Yeah. I mean, listen, we understand most people are not going to purchase it. What I would
Yeah.
say is, if you have an insured that needs it or is actually needs it via a bank requirement, or actually is interested
Hmm.
in covering themselves for terrorism, there are very good products out there. And if they're paying a few $1,000s for TRIA, that's when it kind of makes sense to explore these other products, because you actually might save money and get better coverage.
James, I don't know if you're allowed to talk about this, but have you had any policies trigger coverage?
Luckily, not. We do not
Okay,
want
good.
any.
Good.
Our capacity is from London, and they insure terrorism all over the world. So I know they have, but we personally, thankfully.
Good. Okay. That's all I got.
Man, that was good.
Cool.
That was good. James, if anybody wants to pick your brain, we wrap this puppy up. If anyone wants to pick your brain or reach out, I know you're in the pod community, but what's a good place to, follow you guys, see what you're doing, any specific questions on what we talked about? What's the best place for that?
Yeah, sure. I mean, if you're in the pod community, you can always reach out to me on the Telegram. If you are not, feel free to reach out to me on LinkedIn. I'm on LinkedIn. You can also just email me, J Monreale. The spelling of my name, I think, is down below, at sound-risk.com. But yeah, we're available. We are always happy to help.
Awesome. Appreciate it. Everybody,
How
that's
dare
another
you steal
episode.
my name, by the way. Sorry.
That's going to be a separate episode, Shawn. We're going to do that part 2
right.
one. You're going to get
It's a good name, Shawn. I love the decision.
You put the cat out of your bag.
I did, but whatever.
You put the cat out of the bag there. Yeah, his lawyers are going to be talking to your lawyers right when we get done with this one. Everybody,
SoundRisk, we're okay.
Yeah, we're good.
That's another episode of the Scratch Agency Podcast. Thanks for joining us. Do us a favor, like the show, share the show, and subscribe. Most importantly, remember to dig down deep, believe in yourself, and own your own future. We'll see you next week. Take care.